Most students find the cost of goods manufacturer and cost of goods schedule pretty daunting. So I want to do this video to help you out. And this particular example mimics a similar problem to what you're going to tackle for your first problem set for chapter 3 on exercise 3.3. Again, same process, not the exact same numbers, but you can utilize the same process. And so for this particular problem, they ask us to do number one, a cost of goods manufactured schedule, and then number two, cost of goods sold. I'm going to focus on one point at a time, and we're going to start out with the cost of goods manufactured schedule. And they got some titles listed, not necessarily all, but there's going to be a lot of information we need to fill in. So again, this can seem very daunting because there's really 6 steps, and if you mess up anywhere in between, it means your final numbers aren't going to be correct. So let's go through step by step. And where I'm going to start out is with something that you should have learned in Intro to Financial Accounting. And I think rather than just trying to memorize the steps that we need to execute, let's think back to something we already know and adjust it so we get some logic of what we're actually doing here. And if you recall, when you needed to calculate cost of goods sold for inventory, when we were a retailer or a wholesaler just buying and reselling stuff, we took beginning finished goods inventory plus any purchases of finished goods inventory, and if we subtracted out ending finished good inventory, we got the cost of the finished goods that we actually sold. And if you also recall, make a point that beginning finished goods inventory plus purchases, that was the finished goods inventory we had available to sell. Again, subtract out what we're left with, and that gets the cost of what we actually sold. That equation's great. It stays the same with some modifications here, and I'm going to just make it more generic. Instead of saying beginning finished goods inventory, I'm just going to say beginning inventory, because with the manufacturer, we don't just have finished goods inventory. We have 3 different types of inventory: raw material, those parts and pieces that you buy from your suppliers; work in process, so goods you've worked on but are not yet complete; and finished goods, complete manufactured units. So begin inventory, not purchases, but again, more generic. So costs that I'm adding into the process minus ending inventory equal the cost of what I used or cost of what I subtracted. So again, I'm going to use this generic formula a few different times with a few different tweaks. Our starting out point is going to be our raw material. That's the most basic type of inventory that we have here. So I'm going to take this generic formula, tweak it a little bit, and make it specific to raw material. Beginning raw material inventory plus additions would be purchases of raw material minus ending raw material inventory equal the raw material that I actually used or added into our manufacturing process. So I'm going to look and highlight up above what seems relevant. Well, we do have beginning and ending raw material balances here in our chart. We also have the purchases of raw materials. So I'm going to go to work with my formula. Beginning raw material inventory is 10,800. Add in the purchases of raw material, that's my addition of 30,000. Subtract out my ending raw material inventory of 19,800. That gives me the raw materials that I used or added into the manufacturing process of $21,000. Now, that's great. We got the number that we ultimately wanted over here for a scheduled cost of goods manufacture, but they also want a more formal presentation of it versus what I just more casually listed over here. So I'm just going to transfer my information over here and say beginning raw material inventory of 10,800. That's what I added here. Plus purchase of raw material of 30,000. That's again what I added here. Ultimately, those two things added together are the raw material, those parts and pieces that I had available to add into my manufacturer product of 40,800. If I subtract, just like I did here, the 19,800 ending raw material inventory balance, I get raw materials used in production of 21,000. So that's a lot of work, right? You're like, am I finished yet? No, I've got 5 more steps to do. Something that I need to consider is that raw material can end up being used in one of 2 ways, if you recall from your chapter. It can be direct material, which is something that you can trace to a finished product, or indirect material, which you have trouble tracing, and that becomes part of manufacturing overhead. We need, because we have listed here some indirect materials added into manufacturing overhead, we're going to factor manufacturing overhead into our calculations overall, and we don't want to double dip here and add it in here and a second time with manufacturing overhead. So if you see any indirect materials included in manufacturing overhead, we need to go over here and subtract it from our raw materials used in production. So 21,000 raw material used in production minus indirect materials of 4,500. And although I don't have a title listed here, my number to the right of 16,500 is the direct materials added into my manufacturing process. Again, those are the raw materials I can actually trace to finished goods. Oh, step 2 of 6. So be patient. We're going to keep plugging along with our information. So I'm going to go through here and I'm just striking out to help keep my placeholder of what I've used. I've used for my raw material balances, purchases, and my indirect materials. So those I don't need to consider again. All I've done so far is say what direct materials have I added into the manufacturing process. If you recall from your chapter, we don't just add direct materials in order to produce products. We also add direct labor and manufacturing overhead. So to my direct materials included in my manufacturing process, I'm going to add direct labor of 58,300 that I was given. I'm also going to add in manufacturing overhead applied to work in process of 88,100. Again, if I take my direct materials used in production of 16,500, add to it direct labor of 58,300, manufacturing overhead applied to work in process of 88,100, I get total manufacturing costs of 162,900. Again, I'm not finished. I'm just saying here's all the raw material, labor, and overhead that I added into the process. I'm not saying if it went to incomplete units, if it went to finished units, or it became part of cost of goods sold. I'm just saying here's what I added basically into the pool to possibly produce all of those units. So I'm at step 3. Take a deep breath. We still have some ways to go with this particular process. So again, I'm just going to keep striking out what I've used. I do want to make a point before I move on to work in process. You know by now that sometimes the problems are tricky and they give you extra information, and it's trying to decipher what you need to use and what you don't need to use. To get total manufacturing costs, always use manufacturing overhead applied. If you are given actual manufacturing overhead or estimated manufacturing overhead, just ignore it as far as adding it in here. You always want to use manufacturing overhead applied. Now, I've considered raw material. Now I need to move on and think about the second item of inventory, which is work in process. So those goods that I worked on but are incomplete. Again, take my generic formula of beginning plus additions minus ending equal uses and subtractions, and I'm going to go ahead and accommodate that and make it useful for work in process. So beginning work in process, the additions become what labor, overhead, and raw material did I add to incomplete units? Well, that's the same thing as total manufacturing costs, and I already solved for that. Ending inventory becomes ending work in process inventory. And the uses or subtractions is called cost of goods manufactured. So here's all the costs that I added into units that I actually finished. And that's going to be the end number for my schedule. So let's take a look here. We've got our beginning and ending balances for work in process. We already calculated our total manufacturing cost. So let's plug those numbers into our formula. Beginning work in process inventory of 54,000 plus total manufacturing cost of 162,900 minus ending work in process inventory of 68,100 equal the cost of goods that I manufacture. Again, total cost that I added in to complete units of 148,800. Again, what they want here on our schedule of cost of goods manufactured is a more formal representation. So to those total manufacturing costs that I already included above of 162,900. I'll add that beginning work in process inventory that I did over here of 54,000. I would get total possible incomplete units that I have of 216,900. Subtract any work in process inventory, just like I did over here, of 68,100, and I get cost of goods manufactured of 148,100. Again, I'm not finished. That's not the same as units sold. That's just saying total raw material, labor, and overhead and units that I actually completed this particular period. So hang on, we're getting really, really close. I think we're done with step 4. We're getting really, really close. So where I need to move on to is step number 2, where I'm going to do my final process of schedule of cost of goods sold. So I'm just clearing out some white space here. So we're just looking at requirement 2. And again, I've stricken out all the information that I don't need. So go back to that formula from your Intro to Financial Accounting class. Beginning finished goods plus purchases minus ending finished goods is cost of goods sold. I just need to tweak it just a little bit for somebody who actually manufactures stuff. Still beginning finished goods. It's not purchases. Now it's cost of goods manufactured. So all the raw material, labor, and overhead that I added into complete units for the period, minus ending finished goods, we still call it cost of goods sold. So I'm just tweaking this a little bit. Again, I'm highlighting the information that I need here. I've got the beginning and ending balances of finished goods. I already calculated cost of goods manufactured. Plug those in. Beginning finished goods of 34,700, cost of goods manufactured 148,800, minus ending finished goods of 43,200 equals cost of goods sold of 140,300. That's saying here's the cost of units that I actually sold to customers. So I'm going to minimize my schedule cost of goods manufactured and show that more formally of my schedule cost of goods sold. Again, beginning finished goods of 34,700 plus cost of goods manufactured of 148,800. That's the cost of finished goods that I had available to sell if I add those together. Minus ending finished goods that I subtracted down here, 43,200. Well, we didn't quite call it cost of goods sold. We called it unadjusted cost of goods sold of 140,300. We're getting really, really close. I promise one last little step. So if you also recall from your chapter, we're guesstimating with our overhead because we're doing the estimate at the beginning. We're applying because we don't want to wait until the end of the period to apply it perfectly. We need costs throughout our period, and nobody has a crystal ball at the beginning of the year to anticipate exactly what's going to happen. So no company can apply its overhead according exactly to what it's actually going to incur. Again, we're just guesstimating. So you're going to deal with either underapplied overhead, you didn't apply enough to your units, or overapplied overhead, you applied a bit. Again, don't look at it as an error. It's just a natural part of the process. So what do I do with underapplied overhead? Do I add it to my unadjusted cost of goods sold, or do I subtract it? If we underapplied it, we didn't put enough in. So it's just like, I'm a big cook. If I underapply my seasonings like my salt and pepper, I need to add more to my soup or whatever I happen to be cooking. So here I'm going to add that underapplied overhead of 4,170 to my previous cost of goods sold to get 144,470. If I overapplied, it would have meant I added too much. I need to go ahead and take some out, and that would have been a subtraction. So keep that in mind. In this example, it's underapplied. We add it to it, but on the exam, extra credit, whatever it might be, other problems you might get overapplied, we would need to subtract that out. Now, give yourself a pat on the back if you made it all the way to the end. I know it's a lot of steps, but hopefully relating it to what you already learned in Intro to Financial Accounting can help ease you through the process.